Good morning, good morning, good morning. It is Wednesday, the 25th of February, all day. This is the Morning Blast with myself, Ryan, and of course, Michael. For those of you that don't know, well, obviously you must know by now, otherwise why you're here. This is the Morning Blast. This is a very candid market orientated podcast. Think of it as bar side rather than fireside. It's labeled explicit on the podcast players for a reason. Is because we have filthy minds and filthy mouths. Nothing discussed on the podcast is trading or investment advice, yada, yada, yada. Michael, how are you this morning?
Yeah, very good morning to you, Ryan. Good morning, everyone. I am all right. I did wake up at 2:30 in the morning and couldn't really get back to sleep, which was not ideal. But other than that, we are ready to go.
Did you wake up for the State of the Union?
Well, do you know what? I actually ended up watching it because I happened to be awake and thought I can't get back to sleep, so I may as well watch this. And do you know what? Anyone who didn't wake up at 2 a.m. to watch it, you missed absolutely bugger all.
I think I was getting to bed at 2 a.m. this morning.
That does not surprise me at all. But as I described it to you and Tom Wiseman earlier, think of it as a sort of a greatest hits album, I should say, of all of the things that President Trump loves to talk about, be it the stock market, tax cuts, himself, how he's the best president ever, etc., all into one record long, almost 2-hour duration speech.
I'm shocked and sad that I missed it, but we'll talk about it again in a second, because there was some quite things. Well, there's fairly interesting with like air quotes things. So
I'm scraping the barrel a bit if that's interesting.
But he did mention, but also some points that he didn't raise, which were quite interesting. But anyway, quickly before we move on to that and what happened yesterday, and then we can crack on. An update from our good dear friend Clive Lambert over at Futures Techs for market, where the market is and also levels to watch, etc. Obviously, yesterday equities continued to post mixed signals depending on where you look. S&P still chopping around north of 68.45. Dow futures, they held Fibonacci support at 48,765. Not that we ever mentioned the Dow in this show because Michael hates it for good reason. The Nasdaq, obviously tech focused, still can't see off the 25,045 level. European markets, they were mixed to slightly higher, with the Eurostoxx and FTSE ending the day just shy of recent all-time highs, which is a rarity for those because basically every day recently they've been hitting new all-time highs.
Yes.
Bund futures, they posted a doji candle, which as we know by now is, small bodied, long wick, a bit like myself, and stayed north of 129.52, which is, drum roll please, the Marubozu support. Forex markets a bit dull for now, although they bid in dollar yen yesterday morning has been sustained. Cable is still holding its 200-day simple moving average as support. Obviously, that's basically the only bit of the only bit of technical analysis that myself and Michael are fans of is simple day moving averages. So the fact that we're above the 200-day, I would call that bullish. Bitcoin bears are doing the better work and gunning for 60,000 once more. Gold, the yellow metal, it's all red yesterday, but it's bid overnight, looking good to retest the 5,627 high from late January. Silver, that's continued its recovery. Dips were bought yesterday and overnight. We've seen gains up to 91.18, which gets back to 50% of the selling seen at the turn of the month. Dr. Copper, that's been up to 13,300 overnight after seeing off 13,030 yesterday. Nickel, that posted a large green candle yesterday. 17,610 is now the Marubozu support. Over in oil space, Brent posted another doji, so we're starting to worry that the bulls are running out of steam for now on that one. And again, for the bulls, there's not exactly been any escalation in the Middle East, so they will definitely be getting a little bit jittery, should we say.
We do, of course, just on that, while we're talking about the Middle East, we do, of course, have those US-Iran talks that are scheduled for tomorrow in Geneva. So that's very much something to keep an eye on. The other thing, actually, and our good friend Andrew Hart pointed this out to me this morning in his notes, Indian Prime Minister Modi is actually on a state visit to Israel over today and tomorrow. Now, that doesn't necessarily mean that nothing will happen today or tomorrow, but it would be a bold strategy to start a war just after you've invited the leader of the world's biggest country to come and have tea and biscuits with you.
Yeah, quite. Yeah. Mate, well, again, this is Trump, though, so...
Well, quite. Trying to game out exactly when it would happen is impossible.
Like I said yesterday, I wouldn't have been surprised if missiles started flying around whilst he was doing a State of the Union. But anyway, Henry Hub, obviously the US nat gas, saw more weakness yesterday. This side of the pond, the European equivalent TTF, that was also red again yesterday, as did the European carbon and power markets, and all pointed lower for now. Over in the States on the ag space, soybeans, it did nothing to confirm the shooting star that was posted on Monday, so we continue to back the bulls there, and now eye resistance at 1,169 to 1,164, where we fell over back in November. So obviously everyone's looking at that, wondering if we're going to fall over completely again or bust through. But that's it from Clive. So thank you very much, Clive. Michael, what did happen yesterday for those that weren't in the pub all day?
Good stuff. Thank you, Ryan. Thank you, Clive. My two vertically challenged trends. Well, I was actually off the desk most of yesterday afternoon at a lunch, so I'm sort of doing this for the benefit of myself as well.
Oh, well, take it easy.
In short, though, not much.
Whoa.
Completely honest with you.
Enough of the height jabs.
Oh, that was genuinely not deliberate either.
Okay.
But dearie me. However, as I said, not especially much going on in markets yesterday. Very much a kind of wait and see mode, I think, and a bit of trepidation creeping in. Of course, we've got lingering geopolitical risk in the Middle East, as we just alluded to. We've also got, of course, earnings due from Nvidia after market close today, which we will discuss in a little bit more depth momentarily. And I think the combination of that and just a general lack of any fresh catalysts, now that we've digested all of the nonsense on the trade front from the back end of last week, has largely led to market participants just sitting on the sidelines for the time being. Anyway, as for developments yesterday on the data front, we did have a fairly chunky upside surprise on the latest US consumer confidence metrics. The Conference Board's index rising to 91.2 in February, up from the prior 84.5. Of course, that 84.5 that we saw in January was the lowest level since 2014, so a fairly decent rebound on that front. But at the same time, we did have a softer than expected manufacturing number from the Richmond Fed, with the index falling to -10 in February, down from the -6 that we saw in January. On the issuance front, the US did sell 2-year notes that tailed the when issued by just 0.1 basis points, which is not too bad at all. That, of course, coming ahead of a 5-year sale later on today, and then a 7-year sale on Thursday evening. In terms of other notable catalysts, we'll leave the State of the Union stuff for a short while. On the trade front, though, we did hear from the European Union. Their Trade Commissioner Šefčovič has been speaking to Howard Lutnick, what a lucky fella he is, and reconfirmed that the European Parliament are targeting a vote to approve the US-EU trade deal in March. The EU also, according to Bloomberg, citing their sources, are expecting the US to ease the impact of metals tariffs in the coming weeks. I think we're going to hear quite a lot of stories around this. Of course, just for those who sort of unaware of exactly what's going on the tariff front, we've basically now got 150 days where the Trump administration are going to try and reconstruct the tariff regime that they had before using other legal authorities, namely Section 232 and Section 301. So I think there's going to be a lot of stories around how exactly this tariff regime is going to look, various sectoral levies, country-specific levies. There's going to be a lot of noise because basically the administration are trying to work backwards from Let's take the EU, for example. We've agreed a trade deal with a 15% tariff rate. Now we just need to find a way of implementing that through other legal means. The ends will very, very much likely be exactly as they were before. So I think we're going to get a lot of reporting on the trade front over the next, well, I think that takes us to, mid-July, 150 days? Feels like ages away at this point. It will fly by. Yeah. On the geopolitical front, as Ryan rightly alluded to, tensions continuing to sort of simmer away in the Middle East, although nothing really new has happened at this point. Iran's foreign minister did confirm that they will be resuming talks with the United States in Geneva. They, of course, will take place tomorrow. His deputy was also on Newswire saying that Tehran is ready to take any necessary steps to reach a deal with the United States, while also calling a US strike on Iran a, quote, real gamble. Very much the kind of usual rhetoric that you would expect from the Iranians on that front. Moving on to a couple of bits of, before I do move on to corporate news, one story here in the UK that broke this morning, the energy price cap, Ofgem announcing that will fall by 7% from April. That is broadly in line with the decline that was expected. The one thing that does take a bit of shine off that is standing charges are going up again, I think by about 5% in terms of electricity. However, it is just confirmation of our, expectations and the Bank of England's expectations that inflation is on track to return to the 2% target at some point in the spring. It's just another kind of tick in the box to confirm that the bank could indeed pull the trigger on a rate cut as soon as the next meeting in March. And as I said,
just quickly on that. So what at the moment, gun to your head, what is the action in the next BOE meeting?
25 basis point cut, 6-3 vote.
Oh, not that you had that prepared, but yeah.
I actually didn't, but it's being a London-based analyst, it's a bit shit if you can't do that off the cuff, isn't it? It'd be like me not knowing where bank rate is or something.
Well, we joke, but there's plenty of people that wouldn't.
Well, yeah, that is true. The less said about that, the better. But I do think, and actually just on that, on a sort of semi-serious note, there's not actually that much information due between now and that next MPC meeting that could really move the needle. So the MPC meet on the 19th of March. The next labour market data comes out just before that meeting, I think the Tuesday of that week. We don't get the next CPI report, the February inflation numbers, until the week after the MPC. So it's really just that the January jobs numbers that are the sort of material relief that could alter those expectations. And actually, I think anyone expecting a major rebound or turnaround in employment conditions in the UK is probably wide of the mark, sadly.
Yeah, no, I agree.
Just a few bits of corporate news before we move on to the other things we want to talk about. On the AI front, circular financing worries are back. Meta yesterday signing what was Bloomberg were calling a blockbuster deal with AMD to spend double-digit billions on AI equipment. This, of course, Meta continuing to scale out their AI efforts. As part of this deal, Meta are going to receive warrants which entitle them to purchase as much as 160 million, with an M, shares of AMD in stages, depending on how progress and performance goes over the course of this deal. Of course, we've seen many such iterations of this sort of thing where a hyperscaler buys chips and gets stock in the firm that they're buying the chips from.
But what was the technical word phrase you used? Because I normally just say circle jerk. But how did you
circular finance?
That's it. See, right. This is why we cater to all levels of brow. I'm kind of like this people, standing around a biscuit.
No.
And you're there with like the highbrow take, which is exactly what we need.
And my elephant got another run out yesterday.
Oi.
Which is not a euphemism. Before anyone worries, go look at my Twitter feed for what I'm on about. In any case, we did.
Fans.
Oh no, I'd have to pay people to join that. Anyway, moving on. We did see AMD stock rally in the aftermath of that. At one point, AMD was up by about 15% on the day. Predictably, though, we also saw some downside in other chip makers. Nvidia traded a bit softer ahead of earnings today, of course. Broadcom a little bit softer on the day as well. Just two other bits of corporate news before we move on. Firstly, Novo Nordisk, they are in what can only be described as a shambles at this moment in time. Eli Lilly seemed to have eaten away, that's an odd pun, eaten away almost all of the market for Ozempic with their Yeah, very good. With their alternative, Novo also recently announced clinical trials for their oral GLP-1 drug. Obviously, you currently inject Ozempic. They want to put it in a pill. The trial effectively did not go very well, and they are again behind Eli Lilly on that front. It feels like they're getting a bit desperate, because yesterday they announced that they were going to cut the price of Ozempic and Wegovy by as much as 50% starting in next January. It feels like they're kind of scraping the barrel in terms of finding ways to try and catch up now. And lastly, we did mention yesterday that Bloomberg were talking about how PayPal was attracting potential acquisition interest. One of the potential suitors in that deal is a company called Stripe. So we will continue to watch that one closely. For those unaware, PayPal's stock has just fallen off a cliff over the last sort of 6 months or so. And as a result, various suitors are potentially sniffing around and looking to get a deal done on the cheap. For the time being, that's all from me.
Well, thank you very much, Mr. Michael Brown. So, yes, so a couple of things to mention. Well, a couple of topics of the day, so to speak. Firstly, obviously, State of the Union, which, as you said, rightly said this morning, well, earlier on, it's the longest victory lap in history, basically. What, an hour and 48 minutes. Obviously, it was basically, you know, Trump being able to talk about himself for nearly 2 hours. So he loved it. Markets, was there any real implications for markets? I don't really think there was. I think one thing to flag, and again, this isn't anything you can trade off the back of, but just something worth mentioning. There was no mention at all, really, about China. And now, obviously, there's many reasons potentially for that. One of them potentially is the fact that he's going to be over there in March. So we know what Trump's like. Why mention something if you're going to be over there in 2 weeks' time? Really, without, we don't need to dwell on it if there's no need to dwell on it. For you, was there anything that was worth mentioning regarding the economy and markets? For me, I don't think there really was.
No, I don't think there was, but actually, I think your point around China is an interesting one. It comes back to something we were saying yesterday, and I think you've got to look at the State of the Union through the lens of who is the intended audience of this and what is the broader political context around it. We are in a midterm election year in the United States. In a little over 9 months' time, the voters will be going to the polls across the country. This is kind of Trump's opportunity to, as you say, take a bit of a victory lap, essentially stand there and go, I've had a year in office. This is what I've done. These are my achievements. This is what I plan to do over the next year, and kind of set his stall out, not to campaign for re-election, because obviously he's not on the ballot, but to encourage people to vote for the GOP in those midterm elections. And I think that's why it was really telling that there wasn't much on China. He did touch on Iran very briefly, saying that they're working on missiles that could reach the US and all the rest of it.
So just on the Iranian thing, obviously, as we all know, there's a ton of assets, etc., in the region, and there's a lot of people waiting for this to kind of escalate further, etc. One thing that I thought was quite interesting and almost like positioning himself to maybe be able to make a move is he claimed that there's been 32,000 deaths in the Iranian protests so far. Now, I flagged this because that's far, far higher than any verified estimated count. So where it did feel very much like spin the wheel, pick a random number in the tombola. Why would you pick a number that far exceeds any other estimate? Well, one reason you might do that is if you have already staked your claim and said the only reason we'd intervene is if they keep killing innocent protesters. Now, the fact he then specified, he came out and specifically said a very, very large number of people that have died. Again, there's some people already out there saying that that's laying another level of kind of foundations to justify a move. But as we know with Trump, escalates, de-escalate. Is that the reason why there's a ton of assets over there and whatnot? But again, I think we'll know not a lot more come Thursday evening, and more so the weekend. I think there will be a lot of people this weekend thinking, hang on a second, jokes aside, but things always seem to happen on Saturdays and Sundays. Could this weekend be it? And I think definitely there's more scope for it to happen this weekend than last weekend, but we'll see.
Yeah, I would agree with that. But just besides Iran, it was all very, very domestically
Yes.
focused. And I think that was really interesting because one of the things, if you look at the polling and if you read what's been written in some of the US media, a lot of people close to the Trump administration have been saying to the president, you need to be more domestically focused and less foreign policy
Yeah.
focused into the midterm elections. And setting Iran to one side, I do wonder whether that is going to be something that we see an increasing pivot towards domestic issues, particularly towards the economy, as the year goes on.
Yeah.
Of course, Trump's given 2 or 3 rallies on, bringing jobs back to the US and all the rest of it in recent weeks. You'd expect that to only continue. So I do think that potentially, compared to last year, where the focus was all very, very broad, global, international stuff, is the Trump administration this year going to start looking inwards a little bit more in an attempt to, well, ultimately make up ground against the Democrats in those midterm elections? Because based on current polling, it looks highly likely that the Democrats will be reclaiming the House come November.
Yeah, no, exactly that, exactly that. Also, something we must mention is basically only because everyone else is mentioning it, is, well, my good friend, and I say this because I've got very, very pissed with him in the Stafford, funny enough, is
What's a surprise?
what a surprise. James over at Citrini Research, obviously he put out a couple of days ago, basically a thought experiment. That's all it was. It was very clear. This is a thought experiment about what could happen in a couple of years' time if AI kills it and replaces lots of jobs. He made it very, very clear that this is simply a thought experiment and it's not his base case. And I can assure you, knowing James in the real world, that he is incredibly bullish stocks all the time. But yeah, the world kind of lost its mind for 24 hours, 48 hours over this note that he put out, to the extent where we had, was it Fed's Waller mentioned it yesterday, or was it Waller or
He did, yeah. Waller mentioned it.
Waller mentioned it. It was in the FT, it was in Bloomberg. People saying that it was his research note that caused stocks to sell off yesterday before. Was it IBM? IBM lost 13%, worst day since 2000. People, look, let's be very, very clear about this. Anyone seriously suggesting that real money, funds, etc., went to market and started just offering out stocks because of this one note that was very clearly a thought experiment, they really do need to give their heads a wobble.
Yeah, absolutely. I think there's again, a lot of people sort of, without realizing it, admitting to a degree of naivety as to how markets actually work. I don't think anyone running real money is making investment decisions on the back of a hypothetical research note that's been published. I mean, firstly, fair play to the fella. It's an interesting note. I've read it a couple of times and he's got a hell of a lot of traction from it. He has succeeded on that front. I do think it speaks to sentiment, though, to a certain degree, because the market, and yes, calmer tones prevailed yesterday. We will obviously see whether that can last through the earnings report from Nvidia a little bit later on. But I do think it just speaks to how extreme and how potentially irrational the bearish sentiment that we've seen has got. I mean, I raised this point yesterday. I wrote a note on it as well. But if your argument is along the lines of, basically assuming that Citrini's article is your base case in terms of AI, Anthropic, whoever it is going to effectively erode business models across the economy.
Yeah.
That's, of course, absolutely fine if that is your base assumption. However, in such an assumption, you would expect the hyperscalers to do well. You would expect the chip makers to do well. You would expect the industrial names involved in powering and cooling all of these data centers to do well. That's not what happened. What actually happened was the market basically went, anything tech related, sell it. And again, that's a very odd reaction, because fine, okay, let's take this as a thought experiment and say companies are not going to use IBM in order to recode their systems. They're not going to use Salesforce for their CRM, and they're not going to use LexisNexis for their risk solutions. They're going to build it all in-house. Great. Maybe that is what's going to happen. I don't know. If that is what's going to happen, what's it going to run on? Nvidia chips, AMD chips, Microsoft data centers, AWS data centers, et cetera, et cetera, et cetera. So I think As the dust settles on this and sort of calmer heads start to prevail, I think market participants assumed too bearish of a scenario. Yes, it's actually a little bit scary what was outlined in the note. However, there are going to be winners from that.
Yeah, no, and exactly that. It's like, and it's funny enough, I didn't text James yesterday. Well, whilst I was about 8 pints deep, and said what he really needs to do is put out one now doing a scenario where it's incredibly bullish, because that would just wind everyone up. But also, you could create one of these thought experiments for basically every technology revolution going.
Yeah.
I'm sure someone was talking about the same thing when the steam engine first came out. The fact is, people just need to take a fucking chill pill and realize that things are bubbling along, as you said, and the fact, again, fair play to him because it really has exploded, but fucking hell, people, just chill out for a second. But anyway, that's kind of just brief note on what Citrini's been up to and how market reaction is so over fucking frothed on the back of it. But today, let's forget about kind of scenarios for a couple of years' time with tech. Tonight, obviously, we have something that's far closer and far more meaningful, which is Nvidia earnings.
Indeed, yeah.
So this is obviously the Q4 results come after the market closes tonight. Well, when we say after the market, obviously we mean the US market. I tell you what, just taking as, if in doubt, zoom out, which is what we're big fans of here. You look at Nvidia, you look at the share price, the 52-week range on Nvidia, bearing in mind, at the moment, the market cap is like 4.7 trillion.
Yeah. It's like $40 or something, isn't it?
Well, no, the 52-week range on Nvidia shares is something stupid like $82 to $202. So this is actually...
52-week range. Sorry.
Yeah. There'll be far more people looking at this rather than some research note on Substack. However, as you said, how much of this is, I can't remember what, circular financing? I just call it a circle jerk. So there you go. Yeah, go on. So what are we expecting tonight?
Yeah, so obviously Nvidia, the biggest stock in both the S&P 500 and the Nasdaq 100, also just a bellwether for the AI theme more broadly. So a really, really big event, not only in terms of the stock, but also the market at large. You could almost argue it is a macro event these days in terms of the impact that these earnings can have. In terms of expectations, the street expects adjusted EPS of $1.50, $1.50, which will be up from the $1.30 that we saw in the prior quarter. Revenue, meanwhile, that's expected at 65.9 billion, which would be up from the 57 billion that we saw in the prior quarter. And of course, all eyes really on that data center revenue line. That is basically a euphemism for AI revenue. That's expected at 60.4 billion in the quarter that we have reporting this evening. And that will be up from 51 billion that we saw in the prior quarter. I think in terms of what market participants are going to be looking for, it's those kind of same three factors. Firstly, a beat compared to those consensus expectations that I just outlined. Secondly, it's going to be higher or raised guidance for the quarter ahead. And thirdly, bullish commentary from the CEO, Jensen Huang, along the lines of, we are maintaining our advantage. We are expecting that we're going to continue to operate with margins well north of 70%. Our order books are full. Our product line is looking good, etc., etc., etc. In terms of the stock's performance, we've actually seen Nvidia trade lower in the after hours session following 3 of the last 4 quarterly reports. And I think the issue we have here, and it may be the case this evening as well, is that the bar in terms of the market's expectations for Nvidia is so high that it's almost impossible for the company to ever meet it, because markets will always be going, we want more, we want more, we want more, simply because Nvidia's almost become a victim of its own success in consistently delivering such significant upside surprises in terms of their earnings.
Well,
the other thing sorry, go on.
Just quickly on that, this is one of those things, and I've said many, many times on the Morning Blast regarding trading of earnings data. This is this is a prime example where you could tell me right now what the earnings data is for tonight. I would still lose money.
Oh, 100%.
And I'm glad you flagged as well. Like basically, I say for me, regarding like the 3 components, right? The results, the guidance, and then the aftermarket commentary via Jensen Huang. For me, again, it's probably the wrong way to look at it. This is why I never trade earnings. But guidance and the commentary probably more important than the bottom line or top line numbers.
100%. I mean, I'll go back to the stock in a second, but just markets, sort of earnings in general, we all know, and you and our good friend says it all the time, massage and beat. And what we mean by that is the company spends most of the quarter massaging analyst expectations lower, such that they can then come in and beat those expectations when they deliver those earnings. The other thing to consider, of course, is the market is forward-looking and discounts information about the future. The figures themselves tell us what's happened in the past. The guidance and the commentary tells us what's likely to happen in the future, hence why that takes on greater importance. The other thing I would say just in terms of Nvidia is if you look at options on Nvidia stock, they imply a move, and I mentioned this earlier in the week, of about 4.5% in either direction in the post-market session, which for a $5 trillion market cap company is pretty damn huge.
Well, massive, but the smallest it's been in how many years did you say yesterday?
May 2023. So, and I think I was chatting about this with Linz yesterday, and I think a decent chunk of this is basically a function of, you mentioned the 52-week range, which is very wide, but since about last June or July, Nvidia's gone nowhere. We've been between $170 and $210 and just bumbling along. So, of course, implied vol has a tight correlation with realized vol. That will play a role in it, but also I think it's a case of the market having become a little bit more used to trading around the earnings results. So, Nvidia earnings, the main event today, they are due at 9:20 this evening, London time, 4:20 on the east coast of the US. Besides that, there's not really a lot going on, to be completely honest with you. We've got some final CPI numbers from the Eurozone this morning. We've got a 5-year note auction stateside this evening. We've got a handful of Fed speakers in the mix as well. Continued focus, of course, on the trade and the geopolitical situations too. But I think really it has all the hallmarks of a day where conviction is somewhat capped and participants really just kind of decide to sit on their hands for the most part until we get to those Nvidia earnings in just over 12 hours time.
Exactly that, my friend. Well, Michael, thank you so much as always, my very, very dear friend. If you do fancy a beer later on, you know where you can find me.
I know how to avoid you.
Wow. Okay. Fair comment. Listeners, thank you as always. We really do appreciate you, especially those of you that tune in for the live episode. Well, sorry, the live recording of it. Not that it changes when it goes to editing, because I'll give you a clue, there is no editing. Whatever you're up to today, keep it tight, stay safe. I'm off to massage and beat it.